Before I introduce you to the people on the panel, so it's there. There are a bunch of mentees. Can we go to the mentees? Yes. Presentation. Great. No, it's not it. There we go. I don't know if you're familiar with the format. You can do the QR code, or you can go to menti.com and put in the code. And then the first question is, what kind of organization do you represent? And you have 25 characters. So you write, I'm a journalist, or I'm a small media outlet, or I'm a funder. And if it turns out all of you are funders, we're going to change the format. Funder, Jesus. Okay. Come up. Lots of journalists. You can also, you can thumbs up the questions. That's important for me in some way. Thank you. That always works. Media development, journalist, non-profit. Non-profit is a prominent. We are going to talk about investment. We'll explore how compatible investments and non-profit are. Not very much so. Okay, cool. 47. This is great. A lot of non-profit media in the room. That's great. Thank you.
And lots of likes.
And lots of likes. That is also very important. I asked everyone to send me a description of themselves, and except for one person, everybody has. Yes. So let me introduce the panel. Let me start here at the end. This is Marian Fangli, the only person here who is not a funder, I would say. He is a development manager at context.ro. Context is a great investigative outlet in Romania. This is not him saying, this is me saying it. And Marian works in kind of trying to figure out how to bring in commercial revenues, earned income, as opposed to grant funding and stuff. And I think he does great work in this. So that's Marian. Then next to him, we have Joanna Różycka, who is the Chief Investment Officer at MDIF. MDIF, for those of you who don't know, is a very large impact investor in global media spaces. 140-something investment in 44 countries. Ish. More? Less? Very small, tiny.
You overestimated us, but that's great. We are certainly growing. Now it's 60 plus investments in over 35 plus countries, but more to come.
Okay, you need to update the website. Sorry.
Oh, but you mean in history? Okay, that's clarification. We are all about numbers all the time, so sorry for that. Invested since the beginning of us. It's 135. You are absolutely right.
Thank you. That's also very important. This is a process story. And so MDIF provides loan and equity financing for media companies in the parts of the world where it's not that easy to run media companies, I would say. Everywhere. But also some places more than others. And then we have Carlier from Veronica Foundation. And Veronica supports media across Europe with a mix of grants and loan and equity. And I would say Veronica Foundation is focusing on trying to, again, help media companies become businesses that generate income and become financially sustainable. And they've been doing, I think, good work on that for the last couple of years. Then we have Eszter, the only person on the panel who failed to send the description. But I know Eszter for a while, so that's fine. Eszter is Senior Program Manager for Media and Civic Spaces? Civic Power, at Civitates. Civitates is a large pooled fund in Europe. A pooled fund just means a bunch of rich people and organization pool their money together for then Civitates to give the money away. And Eszter manages the media program and the Civic Power program. And then at the end, the anti-Grand Crusader. Okay. I'm just exaggerating. This is Jakub Parusinski, who's the founder or co-founder of Kyiv Independent, a hugely successful media startup out of Ukraine. He also runs the Fix, which is an organization that helps media companies grow and become more sustainable. And then he also helps others invest, and he invests a little bit himself. And last but not least, he attempts to share what he has learned at the Stockholm School of Economics in Riga.
Perfect. That was fantastic.
Thank you.
Thank you.
Okay, so this is the panel. A lot of people in funding. Let's move on to the next menu. So this is a ranking one. So the question is, which type of support is the most useful for independent media organization? And you can, again, go to your phone and you can rank, do you think multi-year course support, that's the thing? I would love for you to think that. I don't. And then you can, again, thank you. And then you can rank kind of the options here. Equity investment coming up.
Don't be shy.
Yeah, exactly. Tell us what you really think. And then now we go to the panel, really. We start the discussion. And I guess the first question is, and let's start at the far end of the panel. In your work, where do you see the greatest mismatch between newsrooms, media entrepreneurs, organizations looking for resources, looking for funding, and then the other side, people who have resources, who are giving out grants, who are investing? Where do you think that the expectations are misaligned, where the most amount of friction happens? In the meantime, I'm just telling you, multi-year course support grants is really leading the chart. I'm not putting my thumbs on the scale.
Okay. All right. So just to start off, I think you mentioned various types of giving money to media, right? Giving grants, investing, and then there's a whole world in between that people usually like to define in the way that makes them feel the best about what they're doing. And I think that already there we have a huge problem because people don't understand how different the mindset is depending on what you're coming with, right? Like what kind of proposition you're coming with. So, you know, just to be clear, yes, I will make some bold anti-grant statements. Maybe we'll leave them for a little bit later. But just to be clear, you know, this idea that rich and powerful people support cool but poor people who are creative and do cool things, this is as old as time, right? We've always seen this, and that isn't, you know, I don't think that's going away anywhere. This idea of patronage, the fact that you support somebody just because you like what they're doing, that's not going to disappear. I think the problem comes from the fact that we assume that that approach can be scaled to the level of actually solving the problems of the whole industry, right? So this idea that you can come and be a patron and then solve all of the problems of the media, that just doesn't work. On the other side, you know, the approach that investors have is a completely different one. It's about where does the growth go, where does the value grow, how do you grow the value, how do you grow the company? And I think the biggest disconnect in this whole space comes from the fact that media, who, as the previous panel mentioned, do rarely have a business background, rarely think about these questions in the same way that the funders do, all types, right? They're just lost in all of this. And more often than not, they don't bring what the person with the money expects to the table, right? Whether it's a clear business proposal or it's a heartwarming appeal, that's where the biggest mismatch is. Lot, I can see that you...
Yeah.
Yeah, I wanted to grab the mic because otherwise he gives all our answers also, which you already did a little bit. But anyway, so we as investors, we see a very big mismatch in the fact that, okay, shall I explain a little bit what investment is in very short? For us, investment is, you know, giving money to a company to support them in their growth and then get a minority share back. We are kind of a different fund. We're not pushing returns or anything because we are an independent fund. We have our own means. So, but still, we are looking for self-sufficient or sustainable companies. So what we need is cases to invest in, and there are too little cases to invest in. And this is part of the problem that you were already sketching. And I think it's part of that problem has been created by the funding community, by, you know, the conditions that donors pose to new organizations, etc. Because, for example, they need to be an NGO in many cases. On the other hand, you know, they are really looking at what kind of content is being created and often fund this kind of content. So the whole part of building a business and looking at your audience and knowing, you know, how to earn money from them, if possible, I must say, how to earn money from them from the beginning is sometimes forgotten. And I think it's a problem that has been created by us, and that we also are able to well, find a solution partly. But anyway, this is our biggest problem.
Let's go to Eszter, just because that's a different modality. Do you see a lot of business pitches? Give us money and in 3 years we'll be profitable?
Well, I mean, that's the idea. So I think there is a misconception about core funding. So we do provide multiple year core funding, so we kind of provide what is needed in according to the room. But I think it's important that the goal is not that our grantees grow happily over dependent on us, right? So we see core funding as a temporary solution. So we specifically look for organizations on a growth path in an early stage, and we look at core funding as a temporary boost that provides a couple of years of stability until they can figure out how to move toward a self-sustainability business model and how to connect to their audiences and all of that. But we also see very similar problems because we do work with non-profit public interest media, and we fund them and we select them because they have a strong public interest mission. They are mission-driven and not business-driven, right? That's why we select them, and they designed for this mission and have a strong identity, and then we expect them to act as an enterprise. And I'm obviously exaggerating here a little bit, but we push them towards to think about revenue, to think about sustainability, and that's a different kind of mindset, right? And that's something that they struggle with, and we struggle with how to make and how to fund that kind of transition.
I would.
Yeah. Do you want to answer? No, I think. Yeah. Go
on. Because I want to listen to Joanna a little bit about like core funding, and what do you think? How conducive that you think is? I mean, core funding was the #1 thing.
I mean, it was mentioned that it should be a problem, core funding. So what is the problem?
Well, yes, but you... Okay, let's start with that one. Yes, equity investment is really on the bottom of the table, so I guess let's say it loud. Yes, I believe that unrestricted multi-year core support funding is not the best solution for media sustainability. Simply that it doesn't really put a focus on driving your business as a business, and it also is delaying hard decisions that at some point have to be made. It also, I think, is creating some false security or stability, which is very comfortable to get used to, and that's the biggest threat, right? And if I go back a bit to your starting point, before you put me on spot on core funding, you know, if we simplify and building on what a lot already said, you know, investment is putting capital to work to bring some returns. Impact investment is putting capital to work to bring impact and some return, right? And those two parts of it will always exist. It always will be about impact and some return. Concessional return, not commercial return. Obviously, that's not the industry. But it's important to have this mindset to see that this part is never going away. The share of the impact versus profit can differ, and we have different cases, and as usually we say in MDIF, everything is case by case, right? You cannot standardize in this industry. It's very difficult, very different markets, very different challenges. But ultimately, you always have to look at this from this point of view. Two kind of returns have to happen for the investor to be interested. And at the fundraising stage, you have to be able to convince us that you are looking at both of them. And that's crucial. And I, again, repeating myself, don't think core funding multi-year is very helpful in building that argument.
I would, before going to Marian, just something to think about. There was a piece that Brian referenced in the intro, Pricing the Truth. It's a paper that came out, I think, maybe 2 weeks ago. It's quite interesting, and the case it makes, which I think is relevant in this context, is the public good, the impact-driven part. Is there a business model at all? Like, I think the question that paper is asking is, there is some parts of the information ecosystem where value can be monetized, but then they are questioning whether some other parts, a very mission-driven part, can be monetized. And I think the tension here is, I think it is true that multi-year core support shields you from the market forces in a way that makes you unresponsive and makes you slower, and therefore it's not conducive for your sustainability in the long run. But then one question remains, certain types of information, is there even sustainability? And with that, I want to go to Marian, who I think is in the business of producing some very critical kind of mission-driven public interest information at Context, which ultimately is a very kind of typical investigative outlet in Romania. And I'm wondering how you think about, A, this mismatch between expectations of people with money and the newsroom, but also how you think about, is there still hope for generating returns on your work?
So, first I'd like to ask a question from you. How many of you really understand what these investments are about? Please raise a hand. How many? Okay.
Overwhelming majority, if you're not looking around.
So, my point, what I want to talk about, the biggest mismatch, I think, is in business capacity, and by which I mean most reporters do not want to do business, they want to do reporting. Having an editor-in-chief who is business savvy, this is a huge luck, right? This is not the norm. Anybody? This is not the norm. This is lucky. We have one too, so I consider ourselves lucky, right? So I would urge you, with the little money that you have, try to bring in your team a business development manager. This person will know how to do a little bit of everything, will take away from you a lot of... Can I swear?
There is a ventilator on this.
Of
course.
They will take a lot of shit of what you do every day, and they will do it. And you can start with getting somebody part-time. I started with 2 hours. In just a month and a half, I think I was at 4 hours per day. Right? And in 4 hours per day, somebody who's competent and productive, they will do a lot of work, a lot of admin work that you hate doing. I know that. Because my newsroom hates doing it. Yeah? So I would urge you to do that. Don't get the social media manager, or don't get the marketing expert. Maybe a really good marketing person. They would, and then you're going to ask, oh, I'm not going to have the money for this person, and how am I going to find this person? Guys, there are a lot of people in the corporate world. They are aching to get out. Aching to get out of the corporate world. I worked for almost 20 years with doctors. I'm blessed now. I mean, my stress level is it got down from 100 to 10, right? And my only stress is that I have too much work. That's my only stress. So these people exist. They want to come here. This is a healing environment. This is a healing ecosystem. Everybody here is doing good in the world.
Unlike doctors.
That we can talk about that at the cocktail, okay? Right. So these people exist, and you do not have to look very far. You can find them. You can just look through your friend circle and their friends, and I'm sure you will be able to find somebody. A business development manager, part-time, bring this person in, get the money from the grants you already have, and do that. And this person will grow and bring more money. This is what they do.
So Marian, sorry, can I ask a question? So
Please.
is it true that you say that money, like core grant support, should be for a part at least? Because I think it's there in the market. There are grants and there is money available. So if we say we don't want core grants, that's quite stupid because there's money to develop. So how can we put this grant money into development of capacity building, or what should we do to make core grants attractive for investors?
So, my opinion, and I think Civitates is doing here, they're pressing some buttons in this area. Is you should ask for very specific outcomes. So
Yes.
all the organizations that are giving out grants, they should ask for sustainability part in the activities and in the budget. So you need to show that you will at least hire for that grant a business consultant, at least, right? Who will develop sustainability ideas for you.
Yeah, just to confirm that, as I said, with core funding, we still want grantees to get from point A to point B. And that means that their development is constantly traced based on different development areas where data is constantly collected and monitored at how they making progress.
Is it also gated, for example, or what do you do when they don't get to the results?
Well, then we look into why they're not getting into the results and what can we do to help to get to the results.
Okay, let's move on. We are preempting a few questions here and there from later. But another mentee first. So this is a more complicated one. So you have various categories of types of media. So let's say one has a Gen Z audience or younger, a millennial order, a horizontal general interest site, niche vertical, for-profit, non-profit. And then you're asked to rate them. The higher number you give them, you think it's more sort of possible, it's easier for them to attract either a grant or an investment. And you're asked to rate each of these types or each of these categories. How attractive do you think they are for investors and for grant makers? And we have so the high number is the good one. So if you think something is attractive to somebody, yeah, okay, that's happening. Well, it's a difficult one, I know. So Gen Z or younger, you think if someone has a Gen Z or younger audience, is it easy for them to attract a grant or attract investment? What about if it's a millennial or older? Okay. So for-profit is more toward investment. I think that's fair. Non-profit is more toward grants. I think that we have agreement. Gen Z, attractive for grants, maybe more so than investments. Yeah, I think apart from the for-profit, non-profit, we are kind of putting things in the middle. Horizontal general interest, news sites, you don't think they can attract grants or investment to very much extent. Okay. So, well, this will develop. It's, answers are still coming in. But I guess my question here is, what do you think are the attractive qualities of an outlet or a startup or a publisher? Yeah, it would be great for you to start, Joanna.
Sure. So I would start for investment, obviously, which
Yeah.
will go completely opposite probably of the grants. But what is most appealing, I think, nowadays to investors are really the businesses that serve niche audiences. But if not niche audiences, they do understand needs of their audience and they can address it and they can monetize it. So that means that also service-based businesses, B2B events is becoming more and more monetizable business in our current environment. So I would say this is the type of businesses which are, let's say, the easiest to attract investment nowadays, which is probably a bit in line with your graph above.
I mean, people are bunching things in the middle, but
I wouldn't say that, that really, so just referring to those categories, I wouldn't say that Gen Z or younger, older audience makes a difference. The difference is if you understand your audience and you can monetize it and you can get really to build a direct relation with it. That's what matters.
does it matter to you? Is it appealing if someone has a Gen Z audience for ventures?
To us, it really matters, but Gen Z or adjusted consumer behavior, media consumption is a focus area for us. It was Gen Z, and it's now almost the whole population. So, but it's more like changed media consumption behavior. So for us, yeah, we did invest in two to almost three younger generation media, and what you do see is because they're almost all digital first media, they are very agile and very flexible to move and to adjust to new market circumstances. So one of the examples, I almost don't dare to say it, but it was a media platform for Gen Z and is now an influencer agency, biggest part. So,
but basically what you're saying is the reason why you think outlets that cater to Gen Z are appealing because they are lean and nimble and can find easier a spot on the market than a media company that caters to older audiences that tend to be more conservative, larger, more entrenched.
Yeah, and I think they're also an antenna for, what's going to happen within a very short period with the rest of the population. So for us, it's also like tentacles to already research this, what's going to happen. So,
okay. So from the investors, we heard niche verticals are more appealing, B2B businesses are appealing, and then from Lot that younger audiences has also an upside.
Yeah, it's not really an investor's view, but more impact.
Eszter, do you have these distinction? What is an appealing quality in an application that Civitates gets? Civitates gets a lot of application because it's a large fund.
Yes, I think many of the decisions are very much value-based. So the mission around public interest, commitment to hold power to account, to cover systemic corruption. So these kind of commitments and missions are very much appealing for funders. I would say it's I see the difference between the two considerations, and I would say that philanthropic funding is often seen as more like risk tolerant, right, and more patient. and I think that has to do a lot with this more pronounced value-based approach.
Okay.
Can I actually pull it back a little bit to the to Marian's previous comment and both agree and disagree with him? So I think one of the points that would be very interesting from especially from an investor perspective is the team. Yeah, obviously, we've heard this a million times. People are the most important. Blah blah blah. But the point about what's a real difference between a donor and an investor is that if you look at the senior team and you see somebody who actually knows how to manage business, then that's where the investor can say yes. And if that person does not exist, well, then only the donor is left, right? But it's not that easy to find, right? And I think, this is something that we've noticed a lot in media, and I think it is actually a pretty systemic problem. So when you're running a team that does something really cool, can you find one person to take care of, and I quote, the shit, right? And that's a good quote, right? Because that's actually what they're doing. They're doing things that are horrible and no one wants them. And it's like, can you find one person to join your team who's kind of crazy and masochistic and will do all of these things? Because believe me, for most people, they aren't necessarily that fun, right? Very, very few people are born to do things that, to enjoy doing things that other people disregard, are annoyed by, and that often don't bring any recognition within the team, right? So can you find one person? Yes. Can you find 5? Difficult. Very, very difficult. And I think I agree this is absolutely critical. Like, in order to grow as a media, whether it's even in the donation direction, right? You want a well-managed team. And people like that are necessary to have a well-managed team. But especially if you want to grow commercially, you need to bring those people in, recognize them, celebrate them, appreciate their jobs. And, I know of 1 million awards for the best journalist and editor. I think I know 2 for the best media manager, right? I will tell you, most teams that I have seen, the media managers do not feel that happy after a certain period of time. And then there is one other category that I would point to, which is, well, what about the tech people? They sit in the back, don't talk to them, right? They just solved the problem of the website. They would like some appreciation too. By the way, I'm not sort of challenging. I think you raised the correct point. I agree. I'm not saying that context is doing these things. Quite the opposite, right? But in conference after conference, I think we're missing this. Just how much we need to celebrate those poor media managers.
So yeah, a 1 minute silent for the business managers. Yeah, just one moment.
1 minute of applause.
Applause, and also there you go. Thank you. I had many scenarios in my head celebrating with applause. Media managers was not among them, but I'm happy. Just one thing to add. I think the other structural problem is, if you're very business savvy, there are various fields you can get into where the risk versus reward is better than journalism. If you have a great business mind, you can go a lot of places and make money, or you can get into journalism, be the person who everybody's and not make that much money that you could, which I think is a problem. Joanna, you wanted to address something earlier, or?
Yes, but I don't think it's a relevant one. I just want to say that all this kind of mission criteria, we look at them as well. It just, for us, it's entry point, and then we look at the investment, right? So it's not like we don't look at those mission-related arguments. We do, it's crucial, but then ultimately, if the investment could be the investment, we need to look at the business itself. And I think what also Jakub said, this is the mismatch. You didn't let me talk about mismatch. I think the mismatch is really, one of the mismatches is about funding really backing ambition rather than capacity, and that really builds on what Jakub just said about media business managers. And that's exactly what can make a difference in investment decision. Sorry for this.
No, it's a fair point. And I would say there are more newsrooms with ambition and also with the good mission and public interest content, and there are fewer mission who can match this, fewer newsrooms that can match this with some business chops or a business plan or something resembling. Marian, did you want to?
Finally, I can disagree. I found 5. Really? Yeah, we're 6.
But you're so charming.
Okay.
And we really love what we're doing, like writing grants and reporting on grants. Yeah.
Okay. We have a few more things, and then we have. Do you want a more?
Yeah, I wanted to make a point about the investments. I think there are both the examples that you gave, or those are the examples. Those are the lines that you should go for if you want an investment. And in my experience talking to reporters, I know that when you think about investment funds and investors in general, most of you see some money grabbing people. They just want profits and they want to be on your back to I need to see those money and make a profit and let's sell and make the exit. This is not the case. This is a new wave of impact investors, and they are at the forefront, and they are really here to help out. And they're not just helping out by giving some money, they're there to support. They're giving consultancy, and they're really there to support any organization that wants to do this, to support them on their way. So please try to look deeper into it. I know you know how to research things, so so do this, and I think you'll find out that it's very different than what we normally think about venture capital investments.
Also, there is very little venture capital investment in media, I think.
Yeah, so I think this is immediately another problem that you're sketching, because of course we want much more money to come into journalism and media, but because at this stage in media and journalism, you need to have different standards than the general impact investment. It is also difficult to convince other investors to come over. So whenever we are building more cases, more successful cases, and we have to do that together, all of us, that will also bring probably new capital into journalism, where it's lacking now.
Okay, we'll move on to successful cases now. So the mentee is... Okay. So, this is a question to you. Why does media funding and development fail? It's a short answer one. It's your personal experience, an experience of someone else in your vicinity. No core funding. Okay. It's like after the panel, we are still here. We can game it out. Lack of capacity, bad salespeople, lack of patience, wrong selection processes, people, lack of business know-how. I think these are very, very fair points. So much admin. Yes. Okay. No predictability, lack of systems. Interesting. So now I'm going to the panel, and I'm asking you to tell us about a positive and a negative case. You can use names, or you don't have to use names if you don't want to, where the investment, the grant, the capacity building worked really well and achieved what it was supposed to, and then maybe on one that it didn't. Capitalism, oh my God. This was a coordinated thing where suddenly we are not solving capitalism today. I'm very sorry. That's tomorrow's session. So, can we look at a few cases where things worked out and how they worked out, and then some cases where things didn't? Whoever feels like starting.
can start. And thanks, Marian, for a perfect pitch on what we do. In the previous question, I think that was helpful. We don't bite. And actually, that really defines what successful cases are and failures are. They are really about alignment of expectations and alignment on definition of success. And as long as the company and investor is on the same page, then usually you'll have a success, right? The failures are coming from lack of capacity to absorb the funds, because if funds are coming in and there is really no capacity to absorb them, that means also there is no capacity to absorb technical assistance. Our funding always comes with technical capacity support. But if there is no capacity internally to use it, then of course this will not bring company forward. It means expert support, mentoring, coaching, experts, sales, AI, subscription, industry experts which work with us. We do all of that. This is part of our investment. And if organization is really focused on surviving on a daily basis, there is no way to absorb it properly and build for medium-term strategy. That also means that if you don't have at least one of those business people, there is no one that can absorb it and make it work. And that's certainly the big pool of failures. The other one is on misalignment, right? Using or replicating grants approach to investor would never work, because what we are entering in is really partnership. We are co-owners in this business. We want it to be a success, and it's not for our profits. That means also profits for you. So we are in this together, and we have to work as partners, not just sending reporting, right? So that's the mindset which will decide if that's success from our point of view.
Lot?
Oh yeah. I totally agree. But what we see is also, and it's already been mentioned, and maybe mention it again, but it can also be this cultural difficulty to adjust to this new balance between, building revenue streams and editorial focus. So even if the plans, of course, because we are an investor and we tell, we gonna fund new business ideas or revenue streams. So, of course, companies come up to us with new revenue streams or new business ideas. But, for example, we had a case where we funded a publisher to implement new plans to generate revenues. But there was a positive effect, and the success is still coming. But it takes much, much longer because the editor-in-chief and the other editors, we're still in a very different mindset, and they have to fight for every single step they want to take, and that's really, really difficult. So I think that is one of the biggest obstacles that we encounter. And success cases, increasingly a number of smaller independent journalistic companies that really, can become sustainable, and that is a very positive sign. So I think, with a little bit more shared services, and we'll come to that later maybe, but and building a good infrastructure and capacity, that there are good examples. I won't mention a single one, but there are.
Let's mix it up and go to Jakub. Okay. What are some successful things that you found to fix, or what are the not so successful ones?
So let me start with the not so successful one. So back at the beginning of the full-scale invasion of Ukraine, or actually slightly before, together with some colleagues, we launched 2 different media. One of them, I was a huge fan of the content. It had a bigger market of the 2. It had a clearer path to sort of profitability. And I thought that it had a very strong management team. The other was the Cave Independent, just to be clear, which also had all of those things. One of them ended up being successful. The other one wasn't successful. And it was quite interesting because at the end of the day, no matter how great of a person you are, how good of an idea you have, entrepreneurship has a huge rate of failure, right? And sometimes you're just not the right person or in the right place or in the right time, whatever happens, right? And I don't remember exactly how long it took us to pull the plug on the second project. I think it was slightly over a year. And we probably should have done that a lot sooner, because sometimes when things don't take off, they don't take off, right? So the question of why media funding and development aid fail is, I think one of the main reasons is we don't make hard decisions quickly enough, right? So there's a million projects that, like, everyone loves supporting the new project, right? Whether it's with money or likes on Facebook, which are of course of equal value. Then you know, everyone likes to sort of share the new hot thing on the market. But the truth is, in every other industry on the planet, most new projects fail. And yet when a donor has supported a project once or twice, then there is a feeling, well, now you can't let it die. And they go around and sort of pass it around all of the other donors, and you have to sort of keep it alive. And where our industry is plagued with zombie companies, right? With these, they're half alive, half dead. The people who are running them are miserable more often than not, because it's not fun sort of keeping this thing barely alive. And so I think that's a real problem, right? In terms of the successes, so very, very short story. Back in the day when Poland had a bit of a not so friendly government to media, not saying the current situation is perfect, but there was a time when it was worse. One of the public radios essentially got shut down. And as a result, two new initiatives were launched. Radio 357 and Radio Nowy Świat. Digital radios, they both decided to fund themselves primarily through reader revenue on a platform called Patronite. For those who are familiar with reader revenue, that sounds awfully familiar with a company that you've heard about. It's because the business model is almost copied to the point where it could be a copyright issue. It's essentially a Polish Patreon. And nowadays, they're both getting six-figure revenue in dollar terms per month off of this platform, right? That's really cool. You know what? Actually, this is also a story of failure, because while donors have supported a ton of different media in Poland, nobody has supported a piece of tech infrastructure that has actually managed to create not just these two examples, but multiple sustainable examples of media that are reader supported, right? And so, sorry, I've sort of use this as a sneaky way to introduce my propaganda here, right? But my point, which is sort of the big one on, you know, should we do core funding or not core funding? I mean, I wouldn't say I'm that against core funding, because it's good to have a runway that allows you to plan. I think that's very valuable. But ultimately, what I'm always missing in the media funding story is, why aren't we funding solutions that actually increase the amount of capital that is available to media? I'll drop just one idea, and I'm happy to discuss another if we have time. I think over the next 20 years, one of the main sources of growing revenue for media will be legacy giving. For those who don't know what that is, it's when you die and you give your inheritance over to another, to a company and an NGO or something like that, right? There are countries where there are platforms and associations that facilitate legacy giving, connecting NGOs with potential donors. But they're very few and far between. Why aren't donors funding that?
There is, famously in the US, there is a big media company that has a whole department whose job it is to approach elderly donors and convince them to leave their estate to the media company. And it justifies having a whole department. But maybe this is it's out there. Marian?
Thank you.
A success story and or a failure story, quickly?
Both. So we have one story with two sides. Last year we received a grant from Civitates. The grant was, the plan was to develop the video, the short videos and other video materials to promote our work. And the other half was to develop community engagement and to bring money. So the video is working very well. And the other half of the money we invested in the community engagement. We hired somebody with a lot of experience from the ecosystem, so they really know what they're doing. This was great. Last year we did a very small campaign for 2 weeks. In Romania, there's this, you can redirect your income tax to NGOs. There's this facility from the government. We did just 2 weeks, just a test. We got 76 people to give money to redirect, and we got, I think, 11,000 euros. This year we did 1 month at the beginning of the period, and now a second month at the end of the period when people can redirect. We are only at 66 people. We worked probably 20 times more than we did last year. Maybe it's the thing you said. It's not new anymore. We don't know. We still have to measure. This is the bad example. The good example is we've been doing this project for 3 years. We had money from the Americans, from the conservatives, from Ned, and what? Is this a secret? Right?
Not for me.
So we had grant money from them. We did this educational program. We did a school for people who want to become investigative journalists. We made 6 of them, 6 investigative journalists. 5 are still working in our newsroom. Together they published almost 300 articles in the last 3 years. So that's impact, measurable. And now we didn't have the money from the Americans anymore, as you know. So we said, okay, we're going to use the money from Civitates. We're going to, together with this new community manager, and we're going to make this this project of ours public, and we're going to fundraise for it. We did a month of fundraising in December and another month in February. We raised all the money that we need for the direct expenses. Now you need to know that at the end of the project we select 2 people who are going on 6 we are taking in for 6 months of paid internship. So this money is enough for them also. It's around 25,000 euro. So we raised that. Because of this community manager, she did most of the work. And at the event, the first part of the event, the online session that we did, we had 360 people subscribed, 230 participated, 50 applied for the next stage, for the bootcamp, 2-day bootcamp. We selected 15, the best, that we consider the best. And now we're in the process of selecting the final 2 that probably are going to become 2 more investigative journalists in Romania, where there are less than 150. So if by the end of this year we have brought 8 investigative journalists in Romania, where there are less than 150, I think that's making a difference.
I think the grant hawks would say, look, you lost the grant funding from a big institutions, and then you were able to fundraise even better, and you leaned in, and you had very good results for it. But this is a side point. We have a little... Communism is there, also a zombie. Instagram is there. I think, we've been on for 56 minutes. Because I want to leave some space for questions. We will not do the last Menti, although it's an excellent Menti. And I just want to ask one last quick round. If we wanted to see more successful media companies, startups, publishers, people making money, making important journalism, what do we need to change? What do we need to do? How do we get from the current field 10 times this much successful media?
Can I say something controversial?
Yes.
Good. I think we should actually fund more big media. Now, here's why. No, okay. Just stay with me for a second, right? Okay. So, look, you take any industry, and there's the beginning, right? When the whole industry appears, there's Steve Jobs in his garage sort of creating the iMac, whatever, the romantic part. Afterwards, most of the entrepreneurship actually comes from people who first went to bigger organizations and then left them in order to go after more ambitious projects. And I think this is something that we're currently missing in the media ecosystem. It's great that there's a lot of people who have entrepreneurial energy, but frankly, if you could just get like let's say you're launching a media, right? And you want to build a reader revenue. Now, you can take somebody who's passionate about marketing, who's smart and can learn all of this over time, or maybe you could go and poach that somebody who's working in a large corporation, or large, I'm talking 100, 150, 200 people, that's large for a media, and you can sell them on this idea of doing something that has more impact, but something that they already know how to do. And I think there's actually a really big talent gap of people who have worked at the bigger organizations that can be compelled to come to smaller ones to try to do more impactful and more exciting things. So I think by focusing the funding on the smaller ones and starving some of the mid-sized players, I think we're actually doing more harm than good.
Okay, that's a hot take. Eszter?
Well, I mean, I think we could have a role. By that I mean private philanthropy now to bring more money to the table, and because sometimes we look at newsrooms and expect them to solve issues, financial issues, as it were individual problems. And these are not necessarily individual problems, but sometimes structural scarcity. So I think that private philanthropy does have a role to bring more money in. I mean, working with non-journalism funders, convince them to fund journalism. That's kind of one of the baseline, but also working with high net worth individuals and family foundations and providing kind of the channels and the platforms through which this money can find where it's needed. And on the other side, also thinking about that, how the money should be spent effectively and what kind of skill sets needs for that the money would be spent properly. And also this kind of panel inspires me to say this because there is very rarely spaces where a community of media outlets, a community of donors, and a community of investors can think and strategize together. And we might need more of those spaces.
Give it up to IPI. Lot?
Yeah.
How do we have more?
Yeah, I think to get more money in, but then more grant money is not the answer if we don't put the grant money into work in a very different way. So we should sit together, build success cases together, and then show them to the market, and then more grant money and more investment money will come in, I'm sure. So coordination between us, not between, and then also with the same targets for the companies that we would like, to grow and to invest in the longer term to make them investment ready. I think that's a very important one.
Yeah, I think it's really bridging the gap between investment and grants and understanding, putting much more resources and funds in explaining investment logic and prepare media companies. So spend grants for really dedicated, focused investment preparation projects that can lead small or medium-sized companies into investment readiness. I'm not sure if I would argue with Jakub. We've been investing in big media companies for years, and I fully agree on talent gap. I'm not sure more investment will bring more of that lower into the industry.
More investment in innovation, maybe, within the big companies, to make it sort of more specific.
Okay. It's difficult because usually big media companies and we as industry impact investment fund, we are basically present throughout whole industry. So in our portfolio of companies, we have both early stage startups like pre-revenue even, and then we have publicly noted companies in our portfolio. Now, but those big companies will come for the investment for very different purposes. And then it's usually not really lack of funding. It's the other complexity of their situation.
So why not invest in shared services or support of the infrastructural? Because that really makes sense. It gives you, as a fund, a better return, and on the other hand, it also services the industry by making them more effective or efficient.
Yeah, that's a very good point, and we certainly should try to invest in infrastructure or any kind of solutions that would help media monetize or kind of split the expenses, right? The challenge I see is that usually those kind of infrastructure tools cannot really be sustainable if they just target media. So they usually target much wider industries, and that means they are looking for funding completely differently, because they usually go really into VC space. So that's the question, how to actually make them more impact-driven and bring them to media space.
Yeah, well, yeah, they enable the media services by also servicing other markets. As a matter of fact, let's talk.
Marian?
So I believe to have better success, first of all, I believe in taking very small steps, small and secure steps toward the success. And I think the smallest step we can take and make sure that we are on the right path is spend more time together. All types of investors, of all types of grantees, all types of newsrooms spend more time together and really listen to each other. Listen to our needs and our problems, because everybody wants to do good. Think about it. This is why we are all here. We all want to do good. Let's listen to each other and find more solutions to work together. Money is there. Money wants to be invested, right? Right. Right. Money wants to be given. Money wants to be received, guys. Why is it not happening more and better? It's because we still have to listen more to each other. Take small steps. Take like 1 hour a week. Start with that.
Okay, we have time for a few questions. I know you're like yearning for this to continue in perpetuity. But still, if you have a question, raise your hand. People will be here after too. But there is a hand. 2 hands, multiple hands.
Hi, I have a question on core funding. First of all, I would just like to say that this narrative around core funding making media and journalism organizations lazy is incredibly dangerous and tone deaf, considering the environment in which journalists work right now. And my question is, why do we, I think it's an expectation thing, right? So why do we expect media organizations who have core funding to be making revenue within a year, but other media organizations that have investment can, they have investment for several years. For example, some of the biggest startups in the world are still not profitable, right? So what does good core funding look like, and how can that look more successfully like investment? And my last question, what is the perfect amount of years of core funding? What does that look like?
Anybody want to?
Maybe you, Jacob, but I want to say I totally agree. So I think we should make core funding have a different meaning and put it into effect in a good way.
Yeah. So I'll answer part of the second half of the questions. So yeah, when you look at a lot of startups, they get funding and they're unprofitable, and they get more funding and they're still unprofitable. I mean, Uber has only recently really sort of along its super long journey of receiving tens of millions, I can't even say how much, but tons of funding. And the reason was that people would keep putting in money because they saw the prospect of more growth and more potential. So there's really a question of like, based on the project that you have, the media project that you have, well, what's a reasonable runway, right? For sometimes it might be 1 year, sometimes it might be 2 years, sometimes it might be 5, right? And if you are on a path that actually along those 5 years, let's say, that you're going to be unprofitable, but you have a plan to actually build something that's really special and that is sustainable and is great. If you have that plan on year 1 and at year 3 you show people that you're actually progressing against that plan, chances are you're still going to get funding, whether it's grants or impact investing or classic investing. I think the point about the core funding, sort of so I think runway is valid and valuable. The point about it being sort of an excuse, I think it's sort of when you've lost the vision of the plan, and the plan is essentially like, well, how do we fill this year's sort of budget hole, right? When that's the only plan that you have, that's when I think it's dangerous. But yeah, is that a correct assessment of the point? Yeah, thank you.
Okay, one more. 2 more.
Hi. So let me rewind you to the beginning of the conversation when you were talking about hiring a business development person. So in most cases, we are talking about media in countries and regions where democracy is frail, or in some cases under siege. Not too far from here. For example, in Serbia, it's completely autocratic regime, like more or less like it was in Hungary, but far worse in terms of what's the overall situation. So, and I know that there are people in this room from countries where it's far worse. This is Central Europe, basically. And you are saying that, people from corporations are looking forward to opportunities to join some interesting projects. In my opinion, and from my experience, and I've been working with these guys for 25 years now, they are looking for opportunities where they can keep their standard of living and be more comfortable. Working with independent media in countries that are under siege is highly uncomfortable. For you, for your family, for everyone. And it has been a big problem because most of the independent media have been taught to depend on donations from grants and stuff like that. In these countries, it's fairly unsafe to do any kind of public crowdfunding because, well, someone can get the list and then it would be uncomfortable for the individuals and their families. It's also impossible for companies to donate or pay advertising or whatever. So basically, these media outlets are fucked. What do we do with them? How do we solve the problem with sales and biz development? How do we solve the problem from your angle and experience for them not to solely depend on grants? Because it's been a tough ride for most of them. Thanks.
So I actually asked this question myself in a different setting. And the answer of this trainer, very super experienced trainer, was when you are in a situation where you need to survive, because that's what you're describing, you should focus on surviving, which means do whatever you can, whatever works to survive. This, what we talked, doesn't apply. When you are in the position of surviving, you should focus on surviving. You should do whatever you can to make it out of there. And I don't know if you remember, Ryan, I think you had it on your slide. The only thing that is certain, one of the only things that are certain is change. things are going to change. That's why we have to survive, because you're surviving until that point when it changes, and it will change. There's no country in the world where things have lasted in the same way forever, right? Everywhere things have changed at one point. When you can, then you start doing all these things we talked about. Until then, you survive.
Okay, I think we are a little bit over time. All the panelists are here. Please give it up to this wonderful panel of people and for yourself for surviving 70 minutes of this conversation. Thank you for coming.